Okay, someone said you can now get a loan if you had good credit before forbearance and you paid off and are out of forbearance with 3 current payments out of forbearance, meaning 3 months after. So have you heard that?
Yep, that actually was just announced either yesterday or today by the FHFA. I would still caution people about unnecessarily getting into the forbearance program because we really don't know how lenders are going to view being in the forbearance in terms of your credit profile. You're not supposed to get dinged for being in forbearance due to COVID-19, but that doesn't mean that a lender still won't look at that as a red flag and believe you have a higher risk profile than somebody who wasn't in forbearance. But yeah, that is new. If you, according to FHFA, you can now get a loan that Fannie or Freddie will be interested in if you've made 3 consecutive on-time payments, whatever your agreement is with your lender, your servicer, after you're out of the forbearance program. And that is a significant change because prior to that, you weren't guaranteed anything.
We have a question here. I mean, there's a lot of high-priced markets that you need loans that are bigger than the conventional loans that are available today. Is liquidity coming back for non-QM or for the jumbos or not yet? All right. So I would think there would be an opportunity in higher end homes, but and especially in San Francisco, where all this time I thought, wow, that area is way, way, way in a bubble, way overpriced. And she keeps telling me she has been busier than ever. She's had more closings than ever. So it's just surprising if there's not
one of the reasons I believe you might see some price weakening in the high end markets is because of the lack of availability of credit for those borrowers. And it's kind of mind numbing because these tend to be very high net worth people with great credit profiles.
Yeah.
But when you have a Wells Fargo announce that they will do a refi for you on a jumbo if you have $250,000 of liquid capital, or they will write you a purchase loan, but it's at a 10% interest rate for a jumbo. And Wells was probably the dominant player in the jumbo
10%?
space. 10%. So they'll do loans, but they don't really want the loans right now. So anything that represents risk, perceived or otherwise, the lending industry is not taking on right now. It's clamped down. I think it will come back relatively quickly once the dust settles, but you can't get a home equity loan. It's tough to get a cash out refi. Jumbo loans are very difficult to come by. Patience is probably the watchword, but that probably will have an effect on home prices in the luxury market where people do feel the need to sell. So I think you could see some price degradation there.
Yeah, it all boils down right now in the short term to the supply issue we talked about earlier, is that there's just not a lot of supply. So everything that does come up for sale, I think, is getting enough interest that it feels on the retail side, the realtors, that, hey, this is a crazy kind of surprisingly hot market. But that may be more of a short-term window, in my view, if supply comes back on. Although we came into this with, the hallmark of this market was lack of supply or scarcity of supply coming into this crisis. So that gives a nice safety net for things. But on the lending side, I thought you were kind of asking about on the investor side, and you probably know this even better than I do, that we're hearing funding is coming back for the investors, which was one of the scary pieces early on, is, hey, am I going to continue to have this source of funding for my acquisitions? And that seems to be, I'm sure it's not completely back, but it seems to be bouncing back, and to a certain extent.
Yeah,
Kathy,
and I mean, with the uptick, go ahead.
Are you seeing the terms of those hard money or private money loans changing a little bit? I had heard that they were looking for better LTV on some of those loans, or had some other stipulations in place that maybe hadn't been there before the crisis. Are you hearing anything from your network along those lines?
Oh, sorry, I was looking. But I keep seeing some lenders saying they still do different things, but we haven't tested it. So we've worked with a lot of lenders who made a lot of promises, and you know, it's not till you actually do the purchase. But I think I would think if rates are that high that you're going to find people looking for yield, lots of investors looking for yield that they're not finding elsewhere. So I would think that there would be a demand for private lending. We're doing it personally, but I think I'm going to start raising my rates to 20%. Just kidding. I've got so many people asking, what was the name of that lender? Because they looked it up and they couldn't understand it. What was the lender you said?
It's BYAND, by and.
Yeah, they said they looked it up and couldn't find it.
Nope, I forgot a D. It's BYDAND.
Details. So, you guys don't care about details.
My bad.
If you still can't find it, Kathy, let me know and I'll email you a link.
Okay. I'm just so glad we closed on our loan before all this happened, because I'd be freaking out with a construction loan, which is another opportunity or devastating moment for depending on who you are. But so many bridge loans, you know, people, and I remember sitting literally 2 months ago when people were out and about. I was at an event in February sitting at a table with a bunch of multifamily people, and listen, I got caught with short-term loans last time. So like there was no way I was ever going into a bridge loan again after that. And there were people at the table saying, oh no, you know, what could go wrong? And I'm like, well, you were in a market where suddenly there was no money and the project's fabulous, but there's no money to fund it. I mean, you know, it's awful. It was great on the other end of real wealth being able to pick those properties up in foreclosure, but yeah, so the bridge loans are going to be, it's probably a really scary time for people in that arena. Can you, let's see, so we did that, and I know, listen, I know you got to go soon, Rick, so we'll end at the hour. And so many people asking about that lender. So the $1 million, $1 trillion question, is it a good time to buy? This is opinion now, opinion only.
Absolutely. If you can find the inventory and the right price. I mean, that's what our buyers are telling us, which is true. But I think, yeah, I mean, it's I was just getting that question. I would go back to, it's a much trickier time to buy if you're employing the resale strategy, because you are predicting the market, the rehab and resale strategy. You're predicting the market 6 to 8 months down the road, or maybe a little bit less, but that's the typical time frame we see to rehab and resell properties. And I think there's just a lot of market uncertainty that makes it much trickier. You need to have much bigger margins. But the bigger investors I talk to, they see this as an opportunity for that. But you need to be more careful on that side, where you probably have more room for and more cushion for mistakes, and don't have to rely on price appreciation, is buying and holding for rent. And again, we see confidence on that side from our buyers, more confidence from our buyers on that side of things.
All right.
I think Daren just phrased that perfectly. It depends on your time horizon, depends on what your objective is in buying. And if your demographics are in your favor, because there are literally millions and millions of people in the 26 to 32 year age bracket, and the first time home buyer on average right now is 33 years old, and that cohort's predisposition toward home ownership has never been stronger, despite what's going on with the pandemic. So eventually that tide will lift all boats. The question is, to Daren's point, is it within that 6 to 8 month window when you're rehabbing a house? Are we going to have another economic downturn that's going to extend that out further? And can you weather that longer term financially? So it is a good time, but I think you approach with caution and you fine tune every deal that you make.
Yeah. Okay.
And you don't need to be in a rush because, you don't need to be in a rush because there will be more inventory coming.
Exactly.
Whether it may not be a tsunami, but they're on the distress side I'm particularly talking about now, but there will be more inventory coming down the road. So that's also why you have to be careful when you're trying to predict out, especially the 6 to 8 months piece of things.
Okay. Let's see, one quick one, and then Rick. Rick, I know you got to go, so we will. Any final closing statements?
I think I just gave you mine. It can be a good time to buy. I think it's honestly, I think it's still a little bit of a seller's market right now, just because of supply and demand imbalance. But I think, sharpen your pencils, make sure you're doing your homework before you make that purchase. But still going to be a lot of good buying opportunities now and in the immediate future.
Wonderful, thank you. And Daren, I don't. Yeah, I was going to say I can stay a few minutes if you want to, but if you need to go, that's fine too.
I'm actually okay. Yeah.
Okay.
I don't run as tight a schedule as Rick, but
here we go. It was a lot of fun. It was a lot of fun, guys. We'll do it again.
All right. Thank
Thanks,
you
Rick.
for being here. Really, really appreciate your time and everything. All right. Bye-bye. Okay, we've got another question on rent, and this would be, well, definitely the question is, how come there's a high rent collection rate given the moratoriums and evictions? Would have thought renters would take advantage of that. Such a good question, and that was our concern for sure. What the property managers ended up doing is calling to find out who was distressed, who wasn't, but also letting people know, even with the moratorium, you will have to pay your rent. So even if you don't pay it now, you will have to pay it eventually, or you get evicted. And if you're evicted, now you got to live somewhere. So where are you going to live? And now you have an eviction on your, on your documents, on your, when people do a search. So it would be harder for people to find another place to rent, and they might pay more because of their credit history. So it just, a lot of people realize, well, I'm just going to have to figure out how to pay the rent, or they also got the, the stimulus checks, and that helped. So we weren't sure how it would go, and we were a little bit terrified, but people did not want to get kicked out of their homes. That's the bottom line. Is that kind of what you're?
Yeah, I mean, I'd agree exactly with that. And that surprised me. Early on, I was hearing some horror stories from some of our buyers. I talked to one guy who said he had an apartment building. He buys a lot from auction.com. He has an apartment building with, I think, 33 units, and only 3 people lost their jobs. Somehow he knew this, but they appointed someone to come to him and tell him that none of them were going to pay their rent. I haven't followed up with him. So I heard that story. I was like, oh man, is this going to be happening all over the place? And it doesn't seem like it is. And that's a surprise, but I think it is because of the things that you talked about, all the government money being thrown at this, that's helping people actually have funds to pay. And the fact that where else are they going to live?
Yeah, that's what we're seeing. But also it's state by state. It's one of the reasons at Real Wealth that we don't have California listed as a place where we buy rental property, even though Rich and I have owned rental property in California, but we just sold our last one literally a couple weeks ago and got top dollar for it. It was amazing. But yeah, I mean, there are definitely the marches, people marching, hashtag cancel rent, in California and New York. But Daren, I don't know if you know the specific number of renters in the U.S., renter households. Is it? It's like
I should know this off the top of my head, but
I should too. But it's like
I won't even say a number. Yeah, I mean, well, you have home ownership rate is at about 64-65%.
Yeah.
So the rest are renters.
Yeah, but it's like a lot. It's somewhere in the 40 to 50 million, maybe more, rental households. And so when you see people marching about cancel rent, you got to realize that's a handful of people versus millions who are paying their rent. So unfortunately, the media, and Daren, you and I know, because we're in the media a lot, and they lead with, they give these people a lot of attention because people want to hear, oh my gosh, we don't have to pay our rent. But in actuality, people are paying. So.
Yeah, which is a bit of a surprise to me, but I think it's really encouraging that that a lot of folks I think you said this earlier, they want to get back to normal as quickly as possible, and hopefully we'll see that happen. But there is a dependency on how quickly we can get the pandemic issue resolved, which is a big variable in all of this.
Yeah. Do you foresee a 30-year fixed rate mortgage going away?
No, maybe there's more to that question, but I don't.
Yeah.
I don't see that at this point. No.
I think, at the end of the day, you just have to look at where the money's going right now. I mean, why does the government care so much about housing? I mean, they're pouring money into the real estate market, but not all of it, only a portion of it. And it is homes, it's residential. So, the residential housing industry is a backbone of the US economy. So it just seems like there's always going to be that backing there. I mean, don't quote me on that on this one, because always is a big word, but at least it has been.
Yeah, I think it is. What we're seeing now is we still have the Great Recession fresh in our memory, and I kind of said this earlier, but policymakers want to avoid making that mistake of letting the housing market pull everything down with it to a certain extent, and so they realize that's an important piece to try to reinforce. Now, I think, not to beat a dead horse, but I do think that there is a possibility of the overcorrection. By protecting it too much, you can create uncertainty, and actually it can backfire. So I hope, when it comes to the foreclosure moratoriums, I think that's where, if those are extended on for too long, that's where you start to have uncertainty. Okay, when is this? You start to have this idea of shadow inventory building up, which we saw in the last time around, and you have lending standards tightened up because lenders say, well, if I can't foreclose, there's that infinitely increases my risk to lend. So I would just caution on that overcorrection. If any, senators are listening to your show today.
Oh yeah, they're all listening right now.
That's right.